If we think about the US economy over the next couple of years, understanding the capital build out of AI is going to be really important to understanding what we expect to see in growth, labor markets, and inflation. Businesses are spending a lot of money to build out new AI infrastructure. You're seeing demand for construction, demand for raw materials needed to build out the energy infrastructure. This is all going to be a positive tailwind for US economic growth over the next couple of years. Long-term interest rates, like the rate on a mortgage or an auto loan, are influenced by a variety of factors. And what the Fed chooses to do over the next couple of years is just one consideration determining the level of that rate. It can be really tempting as a homeowner or as someone potentially looking to purchase a home to wait for that 3% mortgage rate that we saw in 2020. But in our view, that's going to be very unlikely over the long term. We believe that interest rates are going to remain higher for longer, not move higher, but remain at a higher level than where we were accustomed to prior to the COVID pandemic. Those higher interest rates also lead to better returns in the fixed income market, and most workers are experiencing real wage growth, meaning their wages are growing faster than the rate of inflation, allowing them to help finance borrowing and spending at what might be potentially viewed as higher rates than they would have liked. The US has a really strong competitive advantage right now in the AI infrastructure and technology space. This has contributed to strong US growth really since the global financial crisis. That's something we expect to continue in the near term. A lot of the AI disruption and AI innovation is happening in the United States, and that's going to benefit firms in the United States. As we progress and the technology becomes more significant, we'll start to see those benefits diffuse throughout the broader economy and start to affect more industries outside of just the technology space. While the last few years have brought growing concerns about the future of the US economy, it's important for investors to remember that there are still a lot of positive tailwinds as we head into 2026.